Hey everyone, thanks for joining me. I wanted to take a little bit of time to go over a company that I've been buying more and more shares of recently and that I believe has a potential upside in value as well as a regular dividend. So let's take a few moments to go over this company and see if they're worth buying shares in and also if they deserve our hard-earned money. So today I'm going to be going over GlaxoSmithKline, but I am sure that you're aware of that from the title of the video. So let's get to the important bits. GlaxoSmithKline, also known as GSK, are a pharmaceutical company and they cover several therapeutic areas. This includes respiratory, oncology, antiviral, as well as covering vaccines and general consumer healthcare products. They are currently ranked as one of the largest companies by total sales in the pharmaceutical area. If we look over to their annual report, we can see that GSK are actually in the process of splitting out their company into two separate entities and two separate companies entirely. The first one they've referred to as New GSK, and the second one is an unnamed consumer healthcare brand, which will supply category-leading brands and innovation-based science and consumer products. Hopefully, by splitting this out, the companies will be able to focus their revenue on more specific areas and put the revenue to better use. It's expected that the consumer healthcare company would be more of a steady growing company like we would expect and have more constant revenue that is predictable. And then we would have the New GSK company, which is your traditional biopharmaceutical company, and they will be focusing on specialty medicines, vaccines and R&D and products like that. This split should hopefully prevent the losses from the actual biopharmaceutical failure in production of medication and vaccines away from the consumer branded company, and will allow the consistent revenues of that consumer healthcare company to continue without detrimental effect from the rest of the failures that affect most of the biopharmaceutical area, whilst allowing the labs to narrow their focus more on new medications and new vaccines. As we know, a large section of the world are currently looking into vaccine preparedness, and this could be a big benefit to a company like New GSK, who would be focusing solely on biopharmaceutical production of vaccines and medication. Unfortunately, due to the varying amount of acquisitions GSK have made, including sections of Pfizer combining their consumer healthcare divisions with GSK, it can be relatively difficult to work out the financial information and pick through it all. But that's not going to stop us. We are going to try, and we're going to start off by looking at the overall finances, mainly starting with company revenue. Looking over to GSK's revenue and other finances over the last 5 years, we can see that they have steadily been increasing from 2016 to 2020. However, at this point, there has been a slight hit and the revenue started to drop down from 44.71 billion to around 43.81 billion at the end of 2020. Net income wise, the company has the same story, increasing over the last years, but dropping off in 2020 from around 8.3 billion down to around 7.3 billion. And this was during the pandemic. And then finally, we have cash flow, which isn't as clean as the other two, but it's still kind of the same story, increasing up until when COVID hit, where it dropped slightly, ending 2020 at around 7.6 billion. Now, you may be thinking, is it not strange for a company in the pharmaceutical area to lose money during a pandemic? And while this could be true, the issue here with GSK is that they provide a large range of medication and other products that haven't been used during the pandemic at all. This is prescribed medication that just hasn't gone prescribed due to other concerns and the pandemic itself. They are also working on their own vaccine for COVID, but this is only in the third phase, which started in March 2021. While GSK may not be the first or second or even third company to produce a functioning vaccine, if they can get their vaccine in the works to actually work, this could be a regular supply going forward if COVID becomes like the annual flu jab that we currently get. So they could move in and start taking up some of that market, providing their vaccine does work. Looking over the company's other metrics, we can see that they have a market cap of 90.77 billion, a PE ratio of 11.29, an EPS of 114.10, and a current dividend yield of over 6%. Now, while that dividend yield does sound nice, I do want to point out that while they're going through this restructure, they are going to be keeping the dividend the same. But they have said that post-restructure, they'll be implementing a new dividend policy, which is probably going to drop the amount that's paid out per year. So if you are looking at this, don't look at just the yield, because it is going to disappear in the next couple of years, with the transition aimed to happen around 2023, 2024. On the bright side, we have seen an increase in shareholder equity over the last 5 years, and oddly, a normalised percentage change of over 1,000%, and it's currently sitting at about 19.88 billion. Though that is worth pointing out that the reason that's had such growth over the last 5 years is that the shareholder equity was negative for a period of time during that period. So they also have a return on asset of 6.95%, a return on equity of 42.45%, and a return on invested capital of 11.52%, with a current payout ratio of just shy of 70%, which is a little bit high but not unmanageable, and obviously we know that they will be dropping that post restructure. So for a little bit of fun, let's run an evaluation on the company and see what we can find, because as we know, maths is fun, isn't it? So normally I would look at doing some form of dividend discount model for a company like this. However, in light of the fact that we know the company is going to be changing their dividend in the future and we don't quite know what it is, I'm not particularly comfortable in using that particular model to ascertain a value for the company. So in this case, I'm going to use their PE ratio and extrapolate a price from that. If you're interested in the workings of this and how it all works, I have got a link down in the description below to a video where I explain it, and it also includes a free calculator that you can use if you would like. So for the calculator to work, it does require the following: the EPS, which is currently around 114.10, the PE ratio, which is currently 11.29, an estimated growth rate of the company, which for GSK analysts believe is around 4.86% over the next 5 years, and a rate of return that we would like to see from our investment. So for this one, I'm going to use 12%, which brings the company's value out to around 712.04, which is in pennies, so that would be around £7.12 per share, which is currently below the trading value of GSK, who are sitting at 1,288 pennies, also known as £12.88. However, it is worth noting that investors seem to be, let's say, not keen on the split of the company, as since the announcement the price has started to drop, and for some reason I'm not sure on, unless it's people are finding out about the split later and are selling their shares, it has continued to drop since. If we run these same calculations with the pre-COVID values, we come out to a value of 1171.18, which, as we know, is £11.71, and that is closer to the current trading value of the stock. I personally think that GSK is in a position where it can recover over the next few years before the split itself, and that post-split is going to be a benefit to the bottom line of the company and therefore us as investors. But that doesn't mean necessarily that it will. I have a current buy-in price of around £13, which is over what our analysis particularly says at the moment. But that's my current buy-in rate, and I will be looking to buy more as it's below that value. However, naturally, this isn't a recommendation to go out and buy the stock yourself. If you want to, go and have a look at it a bit more deeper, or if there's anything you want to ask me about it, drop it down in the comments below. I personally am keeping my GSK position to around 4 to 5% of my portfolio at maximum, which is just to hedge my bets in case anything does go awry with the stock. So what are your thoughts on GSK? Is this a company that you think that I'm taking too much risk with, especially in light of the fact that they are going to be splitting over the next few years? Or is this a company that you might want to look into yourself? If there's anything that you think that I should have included in this video, please let me know. This is only my second video on stock review, so I am looking to improve. If there's anything you think I should have included, let me know in the comments below. If you wanted any tools for reviewing your own stocks or stocks that you're looking at buying yourself, I would recommend one of these videos, which also include free tools. And until next time, remember to invest, save, and subscribe.